Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with that inflation data from the United States. According to the Labor Department, consumer prices last month were up 7.9% from a year earlier. That's the highest inflation since 1982 and surpassed the rate seen in January. Tell us about the inflation situation in the U.S. and what you make of it.
Yes, if you look at the inflation rate in the U.S., it accelerated to 7.9% year-on-year in February of 2022, which is the highest since the January of 1982, matching pretty much the market expectation of 7.8%. Now, if you look at the breakdowns, the energy remained the biggest contributor for the rise, rising by 25.6% year-on-year, with the gasoline prices surging 38% year-on-year. Inflation accelerated for shelters by 4.7% year-on-year, food 7.9%, and food at home 8.6%, new vehicle 12.4%, used cars and trucks up 41.2% year-on-year. Excluding the volatile energy and food categories, the core inflation number, CPI, rose 6.4%. It is also the most in 40 years. Still, the surge in energy costs due to the war in Ukraine is still to come. Therefore, the inflation is expected to be peaking in March. In any case, overall uncertainty still remains because of this huge inflation, and that might cause economic recession on a global scale maybe in the future. And that's why we need to watch carefully what happens to the overall global economic growth.
Well, now that inflation data would seem to make a strong case for the Federal Reserve to raise interest rates aggressively. Chairman Powell has already said he supports a hike of 25 basis points. At the same time, though, some factors could suggest caution, like the war in Ukraine. The Fed is meeting next week. What do you expect to come out of that?
Yes, the current expectation for rate hike on the 16th of March is about 25 basis points. The chance of that is about 96.9%. 97%, and the chance of 50 basis point giant step of raising rate is only about 3% level. So therefore, most likely next week, rate will be raised by about 25 basis point. More important point is what's going to happen to the dot graph and how fast the Fed will be raising interest rate over the next couple of years. It is estimated that by end of this year, the chance of rate rising to 1.5%, about 6 times hike, the chance of that is close to 70%. And also by the end of next year, the second half, over 2% rise is about chance of 60%. So pretty much we're expecting around 1.25 to 1.5% rate hike this year, and then next year another 0.5 to 0.75 basis points, so reaching well above 2% by end of next year. I think that what's the most important thing is that despite these rate rise, what will happen to the economic growth rate? People are concerned about the economic recession because of the war. If that's the case, the pace of the rate rise might be slower than expected. And if so, then a market will be reasonably okay. But in any case, we'll be watching carefully how this plays out in terms of the speed of the rise and also what happens to the economic growth rate.
Well, now stocks on Wall Street closed lower overnight. Investors apparently looking at that inflation data and the Ukraine conflict. The Dow off by about 0.3%, the S&P by 0.4%, and the Nasdaq almost 1%. What's the story in the global equity markets?
Yes, as you said, the Dow lost about 0.34%. S&P 500 fell by about 0.43%. Nasdaq Composite also dropped by 0.95%. However, the level of the decline is not that significant per se, despite such a high level of the inflation number coming through. I think the market is expecting that the U.S. raising interest rate will be only 25 basis points sometime next week, and the speed of the rate rise might not be as aggressive as people might be worried about. But nevertheless, all in all, people are quite uncertain about the speed of that rise. And also the ECB is talking about ending the overall bond purchasing program by third quarter of this year. If that's the case, the overall tightening by global scale will be a little bit faster than people are expecting. So that's also a concern. In any case, we need to take a look at what happens to the war effect versus the rate rise and also the labor income growth rate that will cause the consumption rate to be quite strong. So all in all, people are expecting that we're not going to face any economic recession anytime soon, but nevertheless, the chance of that is rising as the speed of the inflation rises.
Well, Korea's main stock index, the Kospi, was off today, too, by about 0.7%, now sitting at about 2,650 or so. The Kosdaq with its tech shares was up, though. Some big swings this week in some top names like Naver and LG Energy Solution. Tell us about the domestic market.
Yes, if you look at the Kospi, it was down by about 0.7%. The Kosdaq but recovered by about plus 0.2%. The foreigners continue to be the net seller of the Korean market, total of selling 700 billion of Kospi and also about 39 billion of Kosdaq, and also they're selling futures market by about 350 billion. Main reason for the foreigners to continue to be selling is because the Korean won continues to depreciate further. If you look at the Korean won, it is hitting at 1230 plus, which is lower since the May of 2020. This is due to because of the general dollar strengthening happening and also surging oil prices affects negatively on the current account surpluses or trade surpluses. We are seeing the current account surplus tumbling down quite significantly because of the cost of the energy rising rapidly as the Korea imports most of the energies. All that is affecting negatively in terms of the economic growth rate. On top of this, because of the currency depreciation and oil prices rising, Korea is faced with the toughest level of inflationary number, which is rising by about 0.6% month on month on February, which is much higher than expected. So therefore, acceleration of inflation is quite negative for the overall economic growth rate. That is affecting negatively as the foreigners are net selling. However, though, the effect of the energy price rise is not as significant as it used to be, given the fact that the overall economy is moving away from the oil-based to more of electric cars and alternative energy side. So we'll watch carefully how that plays out, and we need to see how the semiconductor businesses and automobile businesses gets affected because of this Ukraine war that's happening right now.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us, and have a great weekend.
Thank you.